Welcome to Markets Today. I'm Lata Venkatesh. With me is Surabhi Upadhyay. Actually, it was not a bad start for the trading week at all. After last week's severe losses, in fact, couple of weeks of losses, we saw some element of stability come on Friday. That got built up today, and this despite the fact that both on Friday and today we've had fairly negative global cues thanks to Greece, debt issues not getting resolved, and on fears that the Fed will indicate hawkishness and an early rate hike. In spite of all that, India stood like an island of green, especially the big stocks. The mid-cap stocks were perhaps tad underperformers but still ended in the green. So good day of trade.
Absolutely, Lata. I don't remember the last time we were speaking in these kind of phrases, India and island of green in the global action. But yes, and it is life above 8,000 once again for the Nifty. Let's start with the headlines. Markets kick off the week on a positive note despite weak global cues. The Nifty climbs 0.4%, reclaiming the 8,000 mark. The Sensex puts on 160 points. Auto, pharma and energy stocks lead the buying.
The mid-cap index ends 0.2% higher, trailing frontline indices. Sun TV surges 6% on indications that the Home Ministry may review its stance on denying security clearance to the Sun network. Power Grid falls on reports that the government could divest 5% stake in that company. JP Power, JP Associates and Ad Labs surged between 9 and 16% on heavy volumes.
Kane India closes 4% higher and Vedanta ends marginally lower after boards of both companies propose a merger between the two. CNBC TV18 learns that Kane is in talks with LIC, one of its biggest minority shareholders, in an attempt to get LIC's approval on the deal.
Better than expected industrial output numbers for April pulls up capital goods stocks like L&T and Punj Lloyd, while inflation numbers, not surprising on the downside, hurt banking stocks. Well, those are some of the headlines that dominated the market mind space, and here are the experts that we have lined up on the show for you. Nandan Chakraborty of Axis Capital will join in with his take on the markets. We will also get you the managements of Vedanta and Kane to outline the contours of their big merger. All that's coming your way in the next half hour. But first, Surabhi, the markets.
Absolutely. So let's quickly run through the action. Well, it was not a bad day, as we've been saying. It's a steady start to the week, in fact, on the Lal Street. The bulls managed to avert a late attack by bears to end the day in the green, but only with some marginal gains. Sonia Shenoy is now joining in with a wrap of the day's trading highlights. Sonia, some jitters coming in afternoon trade. Nonetheless, a decent start to the week.
Oh, well, yes, you can say so. It is a decent Monday, but the fact is that at every rise, the market is getting sold off. And that just goes to show you that the trend continues to be quite disappointing. So today as well, the Nifty ended with just minor gains. In fact, at one point, the Nifty was above that 8,050 level, but gave up all of its gains intraday. Global pressures, the Greek bailout worries capped the gains for our own markets. And it was the bank Nifty that was a sore point today. It was under quite a bit of pressure. PSU banks lost out quite a bit. Now, the traders that we spoke to believe that the market rise at every level is very unconvincing. In fact, it continues to be a sell on every rally market in the near term. In the longer term, though, it is still, a correction in a big bull market. And on that subject, we are seeing some signs of an improvement in the investment cycle. We're seeing it in the capital goods numbers, in the IIP data, etc. So the long-term bull trend continues. But today, in terms of losers, what dragged the index lower was banks. You had Bank of Baroda, PNB, IndusInd Bank, Kotak Mahindra Bank, SBI that were all down anywhere between 1 to about 3% Cement was not far behind, so ACC, Ultratech and Ambuja were all down about 1 to 2%. On the gaining side, you had KN India that gained, the adjustment of the Vedanta KN merger swap ratio was playing out today. So KN was up 4%. And then you had blue chip names like HDFC, Sun Pharma, ONGC and Reliance saw some buying interest at lower levels. So these stocks were up about 1 to 1.5%. Autos didn't do too badly. So M&M, Tata Motors, Maruti Suzuki, Bajaj Auto all did quite well. In fact, in the mid-cap space as well, you had a motley bunch of stocks that moved. One were the high beta names like JP Power and JP Associates that rallied about about 9 to 10 odd percent. And then you had some buying seen in names like Sun TV, Syntex Industries, Eicher Motors, Dish TV, all the good quality names that saw buying interest of anywhere between 1 to 4 odd percent. So stable day, yes, but this is still a sell on every rally market. Back to you.
Well, you put it very well, Sonia. It was actually a motley group of stocks, but you will have to say that largely there was an accent for quality. Whether you looked at the heavies or whether you looked at the mid-cap stocks. I mean, for instance, Kane India, there was obvious news on it. Telecom stocks, after a brief letdown, had to see some kind of covering and actual buying. Likewise, quality stocks like, say, Motherson Sumi or stocks like HDFC, ICICI Bank. The stocks that gained today had some merit. Reliance, the oil and gas stocks, all of them were fairly heavy stocks that gained, and there were, of course, the capital goods stocks as well. L&T, Punj Lloyd, Voltas, that variety, indicating that the market was now beginning to believe that there was some improvement in the capex numbers after the IIP. In the IIP numbers for April indicated strong capital goods growth.
Well, that was the day's market action. On that note, let's quickly move to some market perspective. Nandan Chakravarti, MD of Institutional Equity Research at Axis Capital, believes that this is the right time to enter the market on expectations of an economic recovery.
A lot of the earnings growth does not depend on the Indian eco. So it's over the next 6 months would be a very good time to invest for projecting economic growth to happen in a CY16. I think telecom is another area. And among what you said is, sort of forecasting the operating leverage stories, there's auto and there's engineering. So these are our key overweight sectors.
Okay, now the big corporate story, and this one broke after market hours. Sistema Sham and Reliance Communications are in talks to merge their operations. Kritika Saxena was the person who broke that story for us, and Rima Tunulkar is also here with her analysis. Kritika, you first. Since when have these talks been going on, and what exactly are the details?
Lata, talks between telecom players, there have been multiple mix and matches where we saw multiple players talking to each other. But so that's been happening since the last 6 odd months. But in the last 1 or 2 months, things have firmed up. I, in fact, understand that a couple of executives from the Sistema Group were down last month to finalize the contours. So let me just quickly give you an idea about the financial contours if as and when the deal go through. The deal will be a completely share swap deal. So there won't be any cash involved in the deal where Arcom will be buying out the company or buying out stake. What will happen, however, is that after the share swap is completed, after they look at a complete merger, the 3 entities involved in MTS, which is Sistema Group, which is Sham Group, and the government of Russia, will get stake in the merged entity. Now, the percentage I understand is around 8 to 10%. What I understand from my sources is that Arcom is trying to work out and negotiate that. So it could probably come down to around 6 to 8% odd, but all 3 entities will have stake in the merged entity. What is the reason as to why Sistema is pulling out, or why the entire promoters are pulling out? They, in the last 3 years, haven't been making profits. Rima will give you some more color onto their operations over here. But overall, they want to get out of the operational bit, but want to continue to hold some stake in the company. It's a win-win for Arcom. However, there's a little bit of a hiccup over here. I understand that Arcom is unwilling to take on the debt of MTS. Rima will give you some more color on that. But we understand that that is where things have been stuck. And if at all things are resolved with respect to the debt, Arcom will take it on without any liability and with just the customers coming on board.
All right, Kritika, thanks so much for that. Let's actually get to Rima on those financial details. And Rima, do give us color on, where these companies stand with respect to their assets and, of course, how much debt they carry on their balance sheets.
Thanks so much for that. So first, let me start with the market share. Now, Sistema Sham is just a fringe player in the telecom industry. Its market share stands at less than 1%, while Reliance Communication has seen its market share steadily come down over every quarter, and it currently stands at close to about 5.4%. So together, even if you merge the two, you will still have a market share of 6.5%, so much lower than the top 3 players like Bharti, Vodafone and Idea, who cumulatively have 72% market share. So both of them are small players in the industry, and once merged will continue to remain pretty small. With respect to debt, Reliance Communication has been burdened with very high debt. At least as of the March quarter, it had debt of close to about 36 to 37,000 crore rupees. For Sistema Sham, we do not have the exact amount, but there were a few reports which suggested that at least 2 quarters back, they had a debt of close to about $600 million, which today would be about 4,000 odd crore. You could give or take a little more, but this was as of, the last, a few months ago. With respect to the spectrum holding, now this is interesting. Now, Sistema Sham has 800 megahertz spectrum in 9 circles. This is mostly liberalized. It's not contiguous except in one circle, but this can be used for 4G. So this perhaps could be the reason why Reliance Communication would be interested in merging with, Sistema Sham. Reliance Communication, on the other hand, does have pan-India spectrum, but most of its spectrum does come up for renewal in the next 5 years. Now, the key reason why the merger could be there. Now, we do not have exact details. We do not have any financials of the swap ratio, etc. But one rationale could be perhaps it's just, for survival of the two companies in this highly competitive industry. One reason, as we pointed out, Reliance Communication could be interested because Sistema Sham has that liberalized 800 megahertz spectrum in about 8 or 9 circles. So that will help Reliance Communication launch its 4G. The merger between the two, if it's a share swap, as we understand, will not help in cutting down any debt. But also bear in mind, Reliance Communication has been in discussions with various players for, various deals, including, selling their TAS stake, but not much has materialized so far. So let's see where this one goes. Back to you.
Thanks a lot for that, Reema. Yes, there is no way you can buy the equity and not share the debt, so that is going to be a sticky point. Now, the big talking point of the day, of course, has been the mega Kane Vedanta merger. The ratio will be 1:1, which means every Kane shareholder will get one Vedanta share. Varinder is here to break up the contours of that deal. Today actually Kane went up and Vedanta shares fell. Varinder, what are you picking up?
Well, clearly a very interesting day where Kane India stock was up by nearly 3.5% and Vedanta was down nearly 1%. The question which everyone was asking was that why Kane India stock was up by nearly 3.5%. There are three answers for that. The first one, of course, is that if you just see the merger ratio, it is in favor of Kane India. Considering if you take the preference shares, it comes to nearly 1.01. And if you do a technical adjustment of both the stock prices, you will see that, at 188 or something, Kane India stock is nearly 1.03, 1.04 times of Vedanta stock, which was nearly 181 or something. So it is a technical adjustment, a mathematical representation of the merger ratio, taking into account the preference share which was happening today. The second, of course, was, people have been talking about that, cash moving out and all those things. But if you remember it clearly, it was on July 23rd, 2014, when Kane India extended that 1.25 billion loan to a subsidiary of Sterlite, and hence that negative has been already priced in. And third, of course, is the most important thing. Look at the valuations of Kane India. The stock is currently factoring in crude at $50 per barrel, and crude, of course, has been moving up around $60-65 per barrel mark. Most of the analysts on the street believe that all the negatives are priced in. In Kane India at a stock price of nearly 185 or something. CLSA came up with the report in the morning. They upgraded the stock to buy. They have a target price of nearly 270 rupees per share. They clearly say that the stock is building $50 per barrel, assuming even if there is no exploration upside, also assuming if there is 10% rise of government share of profit profit in the oil post 2020, even in spite of that, the stock is trading cheap according to them. They also believe that the market is not even accounting for monetization of Kane India's, remember, the reserve base. That is another one thing which is there. So three important reasons. One is, of course, the merger ratio. Second, of course, is the valuation. If you just see at $50 per barrel, the stock is already factoring in all the negatives.
Very interesting reaction there. Thanks, Varinder, for explaining that to us. 4% up move on in Kane India today. Well, the CEOs of both Kane and Vedanta spoke exclusively with CNBC TV 18, and they asserted that the swap ratio has factored in the potential $3 billion tax hit that Kane may have to take.
The valuations would have taken into consideration the tax liability. We will be resisting that, as we've said, both in Kane has been doing that in the Indian courts, and we're looking at that international arbitration. That will continue independent of this announced merger.
Okay, so you're saying that has already been factored into the swap ratio and, yes, the possibility of maybe one day having to pay that tax liability. Is that fair to the Vedanta shareholders?
Well, again, what we're presenting is something that has to be approved by both the Kane shareholders and the Vedanta shareholders. So it would have to be seen to be fair to all shareholders.
Kane shareholders get a preference share valued at 10 rupees, which is redeemable after 18 months of issuance. We will issue this on when the merger gets effected, and it will be listed on NYSE.
And here's another exclusive story. Indigo is firming up its plans to fly into Dalal Street. Sources say the company will file its draft red herring prospectus, which means its initial offer prospectus, on the 30th of June. It plans to raise up to $400 million and seeks a valuation of about $1.6 billion. The listing process is expected to be completed by the end of this year. And a disclaimer, Indigo did not comment to CNBC TV 18 Square.
Okay, on that note, we'll take a very quick break, but coming up on the other side, Sudarshan Sukhani will be joining in for a technical chat. We'll also get you some stocks that were in news today.